Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we will be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We'll also be discussing on the key sectors and stocks that we should be focusing for the day and the next few trading sessions. First up, coming to the update in the global markets in trade yesterday. In yesterday's trading session, the US indices witnessed a mixed performance for the second consecutive trading session. Technology stocks have witnessed a rebound. So we have Dow, which has settled at levels of 39,112 with a loss of 0.76%, while tech-heavy Nasdaq surged by over 1% in trade yesterday. The S&P 500 has ended up by 0.39% at levels of 5,469. For the S&P 500, the 8-day EMA will act as the immediate support, which is currently placed at the zone of 5,450-5,430 levels. Any sustainable move above the levels of 5,490 will lead to a sharp upside rally towards the mark of 5,580, followed by 5,650 levels. Coming to the other key factors, so we have Brent crude, which is oscillating in a narrow range of 85.45-83.95 levels since the last 5 trading sessions. Going ahead, any sustainable move above the levels of 85.50 will lead to a sharp upside rally in Brent oil, and in that case it is likely to test the levels of 87.50 followed by 89 in the short term, while on the downside the zone of 83.50-83.4 will act as the immediate support, as it is the confluence of the 20-day EMA and 23.6% Fibonacci retracement of its prior up move. Coming to the dollar index, so DXY has ended at 105.61 with a loss of 0.13% in trade. Going ahead, the zone of 105.20-105.1 will be the immediate support for DXY, while on the upside any sustainable move above the levels of 105.90 will lead to a sharp upside rally towards the mark of 106.4 levels in the short term. Now coming to the update regarding our markets. So in trade yesterday, the benchmark index Nifty has given an 8-day consolidation breakout on the daily scale. As we anticipated, banking stocks led the rally. Nifty ended the session about 23,700 with a gain of 0.78%, and it has marked a fresh all-time high. On the daily scale, it has formed a sizable bullish candle, which is a bullish sign, as the index is trading at an all-time high level. All the moving averages and momentum indicators suggest strong bullish momentum in the index. The daily RSI is in a super bullish zone as per the RSI range shift theory. Coming to the levels for the index, so going ahead, the index is likely to continue its northward journey and test the levels of 23,850 followed by the psychological mark of 24,000, while on the downside the support has shifted higher in the zone of 23,590-23,570 levels. On the derivative front, June futures has surged by 0.8% and the cumulative open interest of the current, next and far series has surged by 5.44%, which indicates overall long built up. Among the constituents of the Nifty index, 14 stocks have witnessed long built up and 11 stocks have witnessed short covering rally, while 18 stocks witnessed short built up and 7 stocks have witnessed long unwinding. If we see the option chain, 23,800 strike has significant call open interest followed by 23,900 strike, and on the put side we have 23,700 which has significant open interest followed by 23,600 strike. For the June expiry, we have PCR which is at 1.34 and the max pain which is seen at 23,550. Now coming to the update regarding Bank Nifty. So Bank Nifty, in line with our expectations, the banking benchmark index has strongly outperformed frontline indices and marked a fresh all-time high in trade yesterday. It has ended above 52,600 mark with a gain of nearly 2%. If we see the ratio chart of Bank Nifty as compared to Nifty, it has marked 24 weeks high, which shows strong outperformance. Going ahead, it is likely to continue its upward journey and test the levels of 53,100 followed by 53,600 in the short term. While on the downside, the zone of 52,200, 52,100 is likely to act as the immediate support for the index in case of any immediate decline. On the derivative front, if we see, the June futures has surged by 1.7% and the cumulative open interest of the current, next and far series has surged by 18.66, which indicates overall long built up. If we see the option chain for Bank Nifty, we have 53,000 strike, which on the call side, that is, which has a significant OI, followed by 53,500. And on the put side, it is seen in 52,500, which has significant open interest, followed by 52,000 strike. For the June expiry, if we see, the PCR is at 1.61 and the max pain is currently at 52,100 strike. Coming to the main market indicators, so if you see the volatility index, India VIX has ended at 14.31 with a gain of nearly 2%. Going ahead, if it sustains above the levels of 14.40, it is likely to extend its pullback towards the levels of 15 in the short term. However, broadly till it stays below 15-16 levels, it still remains a buy on dip on an index perspective. Despite the strong upside rally in frontline indices, the overall advance decline ratio was tilted in favor of the declining stocks yesterday, as the broader markets did not participate in the rally. It was only selective large cap counters which witnessed a strong upsurge, which resulted in Nifty and Bank Nifty strongly closing in the green. Now coming to the key sectors in focus, so like we have been highlighting, Nifty Bank, Nifty Private Bank and Nifty Financial Services have witnessed strong traction over the past few sessions, and in trade yesterday as well they marked a fresh all-time high. Considering the current chart structure, it is likely to continue its northward journey for the next couple of trading sessions. Coming to the FII DI data, so FII has bought to the tune of 1175 crores while DI is sold to the tune of 149 crores. FII long short ratio for index futures is at 61.45 on a net basis, this as they purchased 39,165 index futures. On the stock futures front, FIIs have bought to the tune of 15,176 contracts, while on the options front, FIIs bought 2,97,941 call contracts and they simultaneously purchased 3,28,400 put option contracts. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.